Welcome to this explainer. Okay, today we're not just going to stare at a dry, boring list of trading indicators. We're looking at a real evolutionary timeline. Think of it kind of like a senior trader at a prop desk walking you through the market's DNA. We're going to decode exactly how the fatal flaw of one trading strategy literally necessitated the invention of the next. We'll see how these tools grew smarter, faster, and way more resilient over decades of market history.
So let's just dive right into it with a really fundamental question. What is the fatal flaw of every basic trading strategy? Well, it's the core conflict of trend following. Basic systems, like the famous Golden Cross, they look like absolute magic when a market is trending cleanly in one direction. But what happens when the trend just stops and the market goes completely sideways? That's when those basic strategies get absolutely destroyed and they hand back all the profits they just made.
The answer is the absolute ultimate enemy of the trend trader, the whipsaw. This is that choppy, messy, range-bound market condition where the price just fluctuates up and down without any clear directional trend at all. It triggers false breakouts, it tangles up your moving averages, and it causes repeated cumulative losses. Honestly, surviving this exact environment is the entire point of the evolutionary journey we're charting today. Because, simply put, if you can't survive the chop, you're not going to win in the long run.
Right. So to actually survive the whipsaw, we need our first major evolutionary leap. And it all comes down to a single, highly important number, 25. This magic threshold number was identified by the legendary technical analyst J. Wells Wilder Jr. for his ADX indicator. And that number, 25, serves as the ultimate gatekeeper against those extremely dangerous whipsaw markets we just talked about.
See, J. Wells Wilder Jr. introduced a massive paradigm shift. He said, the ADX does not tell you which direction the market is going. It tells you how strongly it is trending. Now, I know what you might be thinking. Other modern tools like strategy number 14, the Aroon indicator, they also attempt to measure trend strength. And that's true. But the ADX, it was the absolute pioneer here. Before the ADX, strategies were always just asking, is the market going up or is it going down? The ADX separates the question of, is there a trend at all, from which direction is it actually going? By dropping below 20, it gives traders this highly sophisticated do-nothing state. It tells you exactly when to sit on your hands and protect your capital.
And you know what? The hard data backs this up beautifully through what we call the gatekeeper effect. Adding this single trend filter to older, more basic strategies instantly boosts their performance. I mean, take the Golden Cross. Its win rate jumps from 58% up to roughly 64 to 67%. That's a real game changer. For the Donchian breakout, those frustrating false breakouts and flat markets are practically eliminated, and the parabolic SAR sees its whipsaw problem dramatically reduced. By simply keeping capital out of the chop, the ADX acts as a universal upgrade to literally everything that came before it.
But look, evolution doesn't just stop at filtering trends, right? It also learns to adapt to volatility. Let's compare two classic channel strategies for a second. The older Donchian channel is completely static. It basically asks if price has broken a new absolute historical extreme over a set number of periods. But the Keltner channel, it asks a much smarter question. It asks, has price moved beyond its expected range given the current relative volatility? By using the average true range, or ATR, the Keltner channel expands in volatile markets and tightens in quiet ones. It physically adapts to the market's breathing. And that adaptive volatility eventually evolves into an even more streamlined tool, which is the supertrend. Think of this as the ultimate minimalist answer to market volatility and pretty much version 2.0 of the trailing line indicator. The supertrend strips away all the noise and draws a single auto-adapting line on your chart, powered by that exact same ATR we just discussed. When price closes above the line, it turns green for long. Close below, it turns red for short. It is incredibly elegant because that single line acts as both your entry signal and your trailing stop loss, adapting automatically to the specific asset's volatility profile without you having to calculate a single thing.
Okay, so this brings us to the absolute climax of our evolutionary journey today, the Ichimoku cloud. If supertrend is the minimalist, Ichimoku is the maximalist. It's literally the Swiss Army knife of technical analysis. It combines all the previous evolutionary leaps we've covered today to perform 5 distinct jobs simultaneously. It gives you trend direction with its line crosses. It shows trend strength via the thickness of the cloud. It plots dynamic support and resistance along the cloud edges. It provides a natural stop loss. And crucially, the cloud itself acts as a trade filter, telling you exactly when to stay out, just like the ADX does.
Now, in practice, trading this system requires incredible rigor. Let's walk through the exact steps for an Ichimoku long entry. Step 1. You wait for price to sit above the cloud, establishing bullish territory. Step 2. You need the Tenkan-sen line to cross above the Kunjin-sen line. Step 3. You look ahead to confirm the future projected cloud is bullish, and yeah, this indicator actually projects 26 periods forward, which is wild. And finally, Step 4. You verify there is thick cloud support right beneath your entry. This multi-layered step-by-step complexity, it's not an accident. It is exactly what filters out the dangerous noise of sideways whipsaw markets.
But hey, the ultimate payoff is in the data, right? Across 25 years of backtesting, we can see exactly how this evolution performs. Starting with our basic, unadapted golden cross, we're looking at a 58% win rate and a Sharpe ratio under 1. But look at the adaptive multi-component systems, the Supertrend and the Ichimoku cloud. They structurally outperform the basic moving averages across the board. Ichimoku leads the entire pack with a massive 65% win rate and a Sharpe ratio of 1.15, meaning its risk-adjusted returns are phenomenally better. So yeah, the evolution actually works.
So I want to leave you with a question today. Take a look at your own charts. Are you still relying on a single magic line, just hoping it'll save you when the market gets choppy? Or are you ready to trade an adaptive, problem-solving system? True edge in the market, it doesn't come from memorizing patterns or blindly following a crossover. It comes from understanding the math, the logic, and the structural evolution behind these tools. Thank you for joining me for this explainer. Keep analyzing, keep adapting, and never stop learning.